Well, we're back again with another Bitcoin analysis video. And I gotta say, yesterday was a pretty exciting day. A lot was going on yesterday, but before we get into what happened, let's take a look at what I thought might play out. And the price action somewhat looks like it's slowing down, but you never can tell with Bitcoin. It can just consolidate, and then plunge $1,000, so you don't know. But I'm looking to this 10.4 area as the next area to hold. And if we break below that, I can't see much more happening other than we drop down to this 9.798 area, because if we look at the chart in here, there's just really not a lot going on where we could pinpoint a really solid area of support. So to recap, what I was hoping would happen is that we would find some support in this area between 10.2 and 10.4. I was hoping we'd maybe consolidate in this area, then start to curve round again. But if we did break through 10.2, there just wasn't really much market structure that was stopping us from getting down to 9.7. So that's what I thought might happen. And as many of you know, I was assisted by some news, which I'll touch on. So let's just watch how the market played out yesterday. This is where we left off. And we can see that we were just kind of moving up and down a little, consolidating as I was hoping we would in the early part of yesterday. But then as we got up into here, we were retesting the bottom of these lows back up into this resistance area. And then from that happened. So yeah, so this was obviously a huge drop. It was mostly fueled by news. There was a few things that sort of came out all at once. There was a rumor that Binance had been hacked, which turned out to be false. It was some trading bot that had been hacked or something. And if you want a bit of a laugh, go check out the Viacoin chart. It's 100x in under 60 seconds because of this hack. And there was some news coming out of Japan that they're going to start clamping down on crypto exchanges, and there was a few little bits and pieces that came out that were driving this sort of capitulation. But this is obviously a technical analysis video, and it actually brings me to a good point, which is quite often people think that news supersedes technical analysis, and to a large degree it does. But what I found is that you'll often see the market respect big levels even in the face of news. So the market might just take off on some good news or capitulate on some bad news. And it might go flying through some levels initially, but once the market starts to run out of steam and the sort of excitement or the exuberance of the news is dying down, the market will tend to find its resting place at a big support level or a big resistance level. So it still tends to respect technical analysis near the end of the move. So obviously here, this is just like a great example, but it doesn't always work out quite this well. So we did break down through here, and like I said, if we break down past this 10.2 level, there's nothing stopping us from getting to 9.7. And we just flew straight past down to 9.7. We actually went down to the bottom of these lows and had a little touchdown there. But then the candle came all the way back up and closed almost bang on this level. So when that happened, I was pretty confident that that was the end of the very strong downward move, purely because we've respected this level to a certain degree, that we've flown straight through it initially, looking like it's just not been respected and we're going to capitulate downwards. It's found the bottom of these lows and then put in a massive wick to close around this area. So what this is telling me is there's huge demand in this area. There's a lot of buyers who thought this was good price. So they came in at the bottom of this range and pushed it all the way back up to the top of this range, and we settled right on this level. So at this point, I wasn't going to just dive into the market, but I thought we would see some upward action. So I was going to wait a couple of candles just to make sure that we're consolidating, and then I would get in and look for a trade up into this next level. And I would actually get out closer to these lows than these lows. In this case, when I'm going against the momentum really, and I get in, I want to take it to the very first area where there could be any trouble, which in this case would be these lows here. So we'll continue to play it out, and at this point we did start to consolidate. So if we zoom in a little, we have this candle that went straight up, and then we pulled back into the level on that candle. So that's actually where I got in long, and then ride it up. And as we can see here, where did we stop? Right into this trouble area, right into those lows. So that's the exact reason that I do that. Got in here at 9,750, was able to ride it up into these lows around 10,150. And as soon as we hit that area, which is the first clustering of lows, which would be the next minor level after the point that we got in, we hit it and we immediately reverse. We make this pin bar candle. So we continue playing it out and we consolidated, and then we went further down into this range. And again, we found some demand coming into the market as we got back into this range. We drive back up again, and then we consolidate a little above the range, and then we drive up again. So this was somewhat textbook, really, in terms of the market respecting the key levels and turning around at the levels that I would expect. So it's obviously quite easy for me to say that, oh, I got in there and I got out there. Yep, aren't I great? But that's not the point, because sometimes I make horrible decisions and the market does all kinds of crazy things and I get sliced to pieces. But this is just a classic example of why I've mentioned that I trade level to level in cases where I don't have a larger bias, where I want to run it for big gains. And I've mentioned it in other videos, and I'll mention it again, and I'm sure I'll mention it countless times into the future, that when I get into a trade and I don't want to hold it for days or weeks because I don't have a bias that we're going to go higher over the next week. In those cases, I want to get in and get out as quickly as possible. I want to get in and just get straight back out again at the first area where there could be any sign of trouble. So that will be the next level. And then depending on if I'm going with the trend or against the trend, if I'm going against it, I'll definitely get out at the first hint, like the first minor level. So in this case, get in here on this big level here. The next minor level is these clustering of lows here. I don't want to play with fire. I want to get straight out at that minor level because I'm going against the prevailing trend over the last day or two. But then if I was going with the trend, I might elect to pick out the next major level and try and ride through the minor levels purely because I have momentum on my side. And I think learning that is quite a critical skill, because all too often, especially people just starting out with a small amount of money, they don't want to get in and then get out when the markets move $200. Because on the account size that they're trading, a $200 move in the market might equate to a $20 profit. I mean, what's the point even doing it if you've just grafted for hours and hours and hours and you've made a $20 profit? You're making less than minimum wage. So the tendency for those people is, I want to get in and I'm going to run this for $5,000 of move, because then I'm making $500 and then it's worth my time. But that's trying to impose your own will onto the market. You're saying, this is what I want to happen and I'm just going to hold for it, instead of actually looking at what the charts are saying, what the market is saying. The market knows, you don't. So you need to follow what the market is telling you rather than you trying to impose yourself onto the market. And this is just such a textbook example of where you can get in here, get out at the first minor level. And if you try to hold it for a run up to these highs up here, you'd be taken down, you'd be into a loss area, then you'd up, and you're chopping around, and it's emotionally difficult to hold on to a trade while that's happening, especially when you're going against the shorter term trend. But in this case, got in here, got straight back out again at these levels, and you've taken some money out the market, and now you can just sit through this chop and you're more than happy because you're out of the market, you've got your profit, and you can just wait for the next setup. So anyway, that's my rant on that. So now let's take a look at my thoughts for the day. So I actually don't think we're going to see very much of an exciting day. I think we're going to consolidate for most of the day, maybe move a bit up, maybe move a bit down. The next area to watch is obviously this area here, around 10.2, 10.3. So if we do get up there, it should pose a bit of resistance. Maybe we break through, maybe we don't. If we break to the downside, the next big level is here on around 89 to 9,000. And if we hop up onto the daily chart and zoom in a bit so we can see, that area is actually a daily level. So that I've got it marked on at 91, but that's just because that's the high up there. But really the range extends down as far as 89 and up to about 91-ish. That range in there is the next really big level. If we start to break down, I would expect the market to turn there. And I've actually had bids in there for about a month now. That's for my long-term portfolio of bids where I want to buy and hold that Bitcoin for an extended period of time. Because about a month ago is when we started to make these highs here, and then we broke up and we just sort of went parabolic from there, and we didn't want to come back. But it was such a big level on the daily time frame that I knew if we came back into there, it would be a good place to get in. So I've had those bids in there for about a month and they're still there. So if the market does come down there, I'll hopefully get a fill on those. But yeah, for today, I think we're just going to range up and down a bit. If we do break down, 9,000 is the place to look for. If we do break up, we've got the back of the trend line. But that highlights something interesting, which is that I was mostly focusing on the log trend line recently because we had that break up through and we retested it and we got into a trade and we went long and it went well. But we've recently obviously broken down through that. And a lot of people are thinking that that has been a rejection of that log trend line and things aren't going well. But if we flip it off log and take a look at the linear trend line, what we see is that we broke through, we had that breakout, which I discussed in a previous video, that we had this battle between the two trend lines and we wanted to know which one was more valid. And we just broke in the linear one at that point, and we were heading towards the log trend line, which we eventually did break. But now we've come back, and that level where we plunged through and came back up to close on the level also coincides with the back of the linear trend line. So I thought that was pretty interesting. And then we tried to probe down again, we couldn't. The closes have all remained above that linear trend line, which could be a sign that that linear trend line is now the one that is in play, and we are respecting that and seeing what's happening with that. But I thought that was an interesting thing to look at. But a lot of people are purely focusing on that log trend line because of the price action that we've had in the last couple of days. But it looks like the linear trend line is also still in play, as we can see here. So another thing that I'll take a look at is throw a fib on from the very bottom of this whole like capitulation move up to these highs where we've sort of double topped up here. Not quite, but kind of. And we did retest here at the 38 fib before we moved up. And this coming back down is also resting on the 38 fib as well. So this is obviously providing a good amount of support, which coincides with the support levels that we'd highlighted on the hourly chart. But something interesting here is that we look like we might be developing a bit of a range, and we could range up and down between the sort of like 12,000-ish area and the 9.5 area. And I don't think that would be bad. A lot of people struggle to trade when we're ranging. So they're always looking for the breakouts or whatever else they're looking for. But I think it'd be quite healthy for us at this point to range, because we did have this capitulation bottom and then this huge bounce where we went nearly 100% in a couple of weeks. I think at this point, if we're finding a value area in this range and we just start popping up and down for the next couple of weeks, I think that would be really healthy. It would provide a lot of time, one, for altcoins to have a nice run, which is always nice. So that's when altcoins tend to do the best, when Bitcoin starts ranging. So altcoins might get a nice pump if this starts to happen. And it will also just allow Bitcoin to catch its breath. It's like up here, a lot of people have sort of forgotten about Bitcoin because we had this massive altcoin run and then it started to fall. And from that point, all people talk about is Bitcoin, because Bitcoin has just been either capitulating and killing altcoins, or it's been like rising and absolutely killing it, and as well killing altcoins. So I think this would be a much needed break for altcoins if we start to range here, but it would also be a much needed rest for Bitcoin. It would allow Bitcoin to catch its breath. Maybe we range, and then the added benefit to a range is when we do finally break out, there's often a really nice trade. So if I just grab the paintbrush and we draw it on, so we could come up here, retest here, come back down, retest there, and then we finally break up, and usually we will come back and retest there, because this becomes a really significant level where we've had multiple touches. When we break through, chances are we're going to come back and retest that level from above as support, and that is a fantastic trade. And I would get in there and be more than happy to run it up. And I have explained that this is a level where if we break and retest, I would get in anyway, because we have these touches up here and this touch here. So it's already in my plan to take that trade if we do break up and retest. But if we continue to range, it makes this level even more juicy for me, and I would definitely be in a trade if we decided to break up and retest. So that's something to be on the lookout for sure. But yeah, other than that, I think Bitcoin is in a pretty good place unless we start to break down. If we do, I want to see this 9,000 hold, and if that can't hold, I mean, yeah, we'll have to see, I guess. But yeah, for now, I'm pretty happy. I think we're just going to consolidate for the next day or two and then maybe have this bigger consolidation range pattern. And we'll just have to see how that all plays out. But as always, that's enough from me, I think. So I will see you tomorrow.